NovaBay Pharmaceuticals Incorporated Detailed Technical Analysis General Overview and Trend. NovaBay Pharmaceuticals has experienced extraordinary volatility over the past 3 months, beginning around 0.55 in late May and reaching a peak of 1.90 in late August following a dramatic surge. The stock currently trades at 1.55 as of August 27, representing a decline of approximately 18% from its recent highs. The overall trend has been extremely bullish with parabolic characteristics, though recent price action suggests a potential short-term topping formation. The stock has shown exceptional sensitivity to news flow and speculative trading, with massive volume spikes during the August surge indicating intense retail and institutional interest. The current pullback appears to be a natural consolidation after the explosive rally. Price and volume patterns reveal extraordinary market participation during the price surge. Notable volume spikes include 178.3 million shares on August 20 when the stock reached 103, and 141.5 million shares on August 27 during the pullback to 155. These figures dwarf the typical daily volume of 10,000 to 50,000 shares seen earlier in the period, indicating a fundamental shift in market dynamics. The on-balance volume indicator at 296.1 million shows massive accumulation during the rally, with recent distribution at elevated levels. Price action reveals a parabolic advance from 0.60 in early August to 1.90 in late August, followed by a sharp but controlled pullback. The stock remains significantly above all moving averages despite the recent decline. Moving averages. The moving average structure confirms the extreme bullish momentum. Short-term averages, 5-day SMA at 107, 5-day EMA at 111, trade significantly below the current price, reflecting the magnitude of the recent surge. Medium-term averages, 20-day SMA at 0.74, 20-day EMA at 0.82, also sit well below current levels, highlighting the strength of the intermediate uptrend. Longer-term averages, 50-day SMA at 0.67, 200-day SMA at 0.63, remain far below the current price, emphasizing the parabolic nature of the advance. The exponential moving averages are positioned above their simple counterparts, reflecting recent price strength. The extreme divergence between current price and all moving averages suggests the stock is in a speculative bubble phase with high risk of volatility. Technical indicators. Momentum indicators show extreme overbought conditions with potential divergence. The RSI 14 at 83.49 indicates severely overbought levels, though it has moderated from the extreme readings above 90 seen during the peak. MACD shows strong positive momentum at 0.13 with a histogram at 0.07, suggesting weakening but still bullish momentum. Stochastics, 15-period K at 60.73, D at 58.31, remain elevated but show early signs of downward divergence. The Commodity Channel Index at 294.16 reflects extreme overbought conditions. Volatility indicators show expanding Bollinger Bands, upper band 123, middle band 0.74, lower band 0.24, suggesting exceptional volatility potential. The parabolic SAR at 0.61 acts as distant support below current price. Money Flow Index at 92.57 indicates extreme buying pressure, while the ADX at 36.15 confirms an extremely strong trend. The Williams % R at -25.70 shows overbought conditions. Linear regression analysis over the past 30 days reveals an explosive upward trajectory with the price trading far above the regression line. The slope of the regression line indicates an unsustainable rate of ascent, while the current position well above the line suggests speculative excess. The regression channel boundaries show the stock moving outside normal statistical parameters, characteristic of parabolic advances. The recent pullback has brought the price closer to the upper regression channel, but it remains significantly above the regression line, indicating the trend remains extremely bullish but vulnerable to correction. Opening price prediction for next trading day. Based on current technical structure, the opening price for the next trading day is projected between 150 and 160. This considers the volatile close at 155, the extreme overbought conditions, and the potential for continued speculative interest. The overnight futures market and pre-market sentiment will be particularly influential given the stock's sensitivity to short-term trading dynamics. The technical setup favors a volatile opening with potential for sharp intraday swings in either direction. Support and resistance analysis. Critical support levels emerge at 150, psychological level, 107, August 19th close, and 090, August 25th low. The current price at 155 sits approximately 0.05 points above immediate psychological support. Resistance levels are positioned at 160, psychological level, 190, recent high, and 200, psychological target. The distance to nearest resistance is approximately 0.05 points, creating a very tight range. Intraday movement patterns will likely feature extreme volatility with potential for rapid swings between support and resistance levels. The stock may experience sharp spikes followed by quick reversals as traders take profits and reposition. Possible high and low values based on ATR-14. The average true range stands at 0.16, indicating exceptional volatility relative to price. Based on this, the possible high for the next trading day is calculated as 155 plus 0.16 equals 171, while the possible low is 155 0.16 equals 139. However, given the parabolic nature of the advance and extreme overbought conditions, the actual range could significantly exceed these projections. A more probable intraday range would be between 140 and 170, with potential for extended moves beyond these levels if momentum accelerates in either direction. Possible scenarios. The primary scenario involves continued extreme volatility with the stock testing both support at 150 and resistance at 160 within the same session. This would be characterized by high volume and sharp price swings as speculative traders battle for control. The alternative scenario features a breakdown below 150 support, leading to a deeper correction toward 107, fueled by profit-taking and long liquidation. This would require increasing volume and negative momentum divergences. A third scenario involves a resumption of the uptrend with a breakout above 160, potentially challenging the 190 high if speculative buying returns. The technical indicators suggest high probability of continued volatility with slight bias toward downside correction given extreme overbought readings. Conclusion: NovaBay Pharmaceuticals remains in an extremely volatile speculative phase following its parabolic rally in August. The technical structure suggests the stock is in a bubble-like condition with exceptional risk of sharp price movements in either direction. Key support levels at 150 and 107 are critical for the bulls to defend, while resistance at 160 and 190 must be overcome to confirm renewed upside momentum. The extreme overbought conditions across all indicators suggest high probability of further consolidation or correction, though the speculative nature of the advance makes prediction particularly challenging. Investors should approach this stock with extreme caution, recognizing that traditional technical analysis may be less reliable during such parabolic moves. The current risk-reward profile is unfavorable for new long positions at current levels, with significant potential for sharp declines if speculative interest wanes. Only traders with high risk tolerance and short time horizons should consider involvement, with strict stop-loss orders essential given the exceptional volatility. Snowflake Inc. Detailed Technical Analysis. General Overview and Trend. Snowflake has experienced significant volatility over the past 3 months, beginning around 202 in late May and reaching a peak of 229.27 in late July before undergoing a substantial correction. The stock currently trades at 200.39 as of August 27, reflecting a decline of approximately 12.5% from its recent highs. The overall trend has transitioned from bullish consolidation to bearish correction, with the price now testing key support levels. While the longer-term trajectory remains positive above the 200-day moving average, Recent price action suggests weakening momentum with lower highs forming. The stock has shown particular sensitivity to broader market movements, with accelerated declines in early August indicating profit-taking and reduced investor confidence. Price and volume patterns reveal critical insights into market sentiment. Notable volume spikes occurred during major directional moves, 85.7 million shares on August 1 during the sharp decline to 205.02, and 86.1 million shares on August 8 when the stock bottomed at 191.73. The recent close at 200.39 came with 17.8 million shares, significantly above the 3-month average of approximately 4 to 5 million shares, suggesting increased participation during the recovery attempt. The on-balance volume indicator at 230.7 million shows persistent distribution since the July peak, confirming selling pressure. Price action reveals a failed breakout above 225 in late July followed by aggressive liquidation, with the stock now trading near the lower end of its recent range moving averages. The moving average structure indicates weakening momentum across timeframes. Short-term averages, 5-day SMA at 196.18, 5-day EMA at 196.84, trade below the current price, reflecting recent bullish recovery attempts. Medium-term averages, 20-day SMA at 199.69, 20-day EMA at 200.00, sit near current levels, suggesting a neutral intermediate stance. Longer-term averages, 50-day SMA at 210.09, 200-day SMA at 178.94, remain below the current price, preserving the long-term bullish structure. The price trading above the 200-day moving average but below the 50-day moving average suggests the correction may be finding support near longer-term levels. The convergence of the 20-day and 50-day moving averages indicates a potential trend transition phase. Technical indicators, momentum indicators signal mixed conditions with bearish bias. The RSI 14 at 48.39 indicates neutral momentum without reaching oversold levels. MACD shows a bearish crossover with the histogram at 0.38, suggesting weakening negative momentum. Stochastics, 15-period K at 29.63, D at 23.42, reside in oversold territory with early signs of upward divergence. The Commodity Channel Index at -3.32 reflects balanced pressure. Volatility indicators show contracting Bollinger Bands, upper band 215.41, middle band 199.69, lower band 183.96, suggesting decreasing volatility potential. The parabolic SAR at 188.00 acts as dynamic support below current price. Money Flow Index at 40.66 indicates neutral distribution, while the ADX at 20.46 confirms a weakening trend. The Williams %R at -32.66 shows neutral positioning. Linear regression. Linear regression analysis over the past 30 days reveals a breakdown from the ascending channel followed by consolidation. The regression slope has flattened, with the price now trading near the regression line after briefly dipping below. This indicates a potential stabilization phase following the correction. The narrowing distance between the regression line and current price suggests decreasing downside pressure. The regression channel boundaries show the stock moving within a normal trading range after the volatility spike, signaling a potential base-building phase rather than continued directional movement. Opening price prediction for next trading day based on current technical structure. The opening price for the next trading day is projected between 199.50 and 201.00. This considers the bullish close at 200.39, positioning above key short-term moving averages, and stabilizing momentum indicators. The overnight futures market and pre-market sentiment will provide additional direction, but the technical setup favors a slightly higher opening. The proximity to recent support levels and improving oscillator readings suggest potential for early strength followed by consolidation. Support and resistance analysis. Critical support levels emerge at 196.66, August 27th low, 194.68, August 25th low, and 191.73, August 8th low. The current price at 200.39 sits approximately 3.73 points above immediate support. Resistance levels are positioned at 202.54, August 27th high, 205.02, August 1st high, and 210.09, 50-day SMA. The distance to nearest resistance is approximately 2.15 points, creating a relatively balanced risk-reward profile. Intraday movement patterns will likely feature initial tests of resistance around 202.00, with potential pullbacks toward 198.00 if resistance holds. Failure to maintain above 196.66 could accelerate selling toward 194.68. Possible high and low values based on ATR-14, the average true range stands at 6.34, indicating moderate volatility. Based on this, the possible high for the next trading day is calculated as 200.39 plus 6.34 is equal to 206.73, while the possible low is 200.39 minus 6.34 is equal to 194.05. However, given the current consolidation phase and stabilizing indicators, the actual range may contract toward the middle of this projection. A more probable intraday range would be between 197.00 and 204.00, with extended moves possible if key levels break. Possible scenarios. The primary scenario involves consolidation between 196.66 and 202.54 as the market digests recent volatility and builds a base for the next directional move. This would be characterized by decreasing volume and contracting volatility. The alternative scenario features a breakdown below 196.66 support, leading to a retest of the 191.73 August low, fueled by renewed selling pressure. This would require volume increases and negative momentum divergences. A third scenario involves a breakout above 202.54 resistance, signaling the beginning of a recovery toward 210.09. The technical indicators slightly favor the consolidation scenario, though the improving short-term momentum increases the probability of upside attempts. Conclusion: Snowflake remains in a consolidation phase following its August correction, with the stock finding support near the 200-day moving average. The technical structure suggests a potential base-building process with balanced risk-reward dynamics. Key support levels at 196.66 and 194.68 are critical for the bulls to defend, while resistance at 202.54 and 205.02 must be overcome to confirm recovery. The violation of the 50-day moving average indicates intermediate weakness, but the position above the 200-day average preserves long-term bullish potential. Investors should monitor volume patterns and support levels closely, with a sustained break below 194.68 signaling deeper correction potential. Conversely, a decisive reclaim of 205.02 resistance would suggest the correction is ending and the uptrend is resuming. The current risk-reward profile favors patience until clearer directional signals emerge at key technical levels.